Trading may seem harder than it actually is. With all these different types of indicators and strategies, especially for beginners, it's hard to keep track. So in today's video, we'll show you 2 simple strategies every beginner should know and combine them with a special indicator to make it even easier. Watch carefully as we'll reveal a secret discount code for getting the indicator at the end of the video. Also, don't forget to like and subscribe if you want to see more. And now, let's get on with the video. We'll start with a fresh tab on TradingView. Here is where we'll set up our first strategy, the support and resistance. Now, what even is that? The support and resistance strategy is a technique used to identify the different price levels where a financial asset tends to stop moving in a certain direction and may reverse. It's kind of like the boundaries of how much our asset can rise or drop in value. So essentially, it helps us better understand and analyze the chart's movements. Support is a price level where buying interest is strong enough to overcome selling pressure, preventing the price from dropping further. It's just like a floor that saves the price from moving lower. Resistance, on the other hand, is a price level where selling interest is strong enough to prevent the price from rising further. This is like a ceiling that caps the price from moving higher. Knowing that, it makes sense these boundaries are typically found at almost every high or low as well as price reversal. Now let's try and set them ourselves. For setting support and resistance, we'd recommend using the rectangle as it allows us to highlight the area where the price tends to react, while still leaving a bit of wiggle room and flexibility, which is especially helpful for beginners. Like we said, we look at the highs, lows, and significant reversals, starting with our support zone. Now, based on that, we set our resistance zone at the highs of our chart. However, our support and resistance zones aren't unbreakable. Sooner or later, the chart will break through either the support or the resistance zone. Depending on the case, the previous resistance zone becomes the new support zone, and vice versa. Now, with our new support zone, there also comes a new resistance zone, and so we just keep following this same concept. There is actually a way of finding out when the chart is likely going to break through the resistance level, having a strong upwards trend, as well as when it's likely to fall through the support zone, having a strong downwards trend. These would be entry points for potential trades, but we'll make it even easier and add an indicator that signals us exactly when these entry points appear, while still remaining non-repaint. Open the Indicators tab and search for the Swift Algo indicator. If you can't find it yet, you might need to go to our website and get access to the indicator first. Now, once it pops up, we add it. It uses an EMA 200 to smooth out price data, helping us identify long-term trends more easily. It then generates signals for entering and exiting trades based on historical patterns and current market conditions, working on long and short trades. Now that we have everything we need, let's start with the next strategy. First, we set our support and resistance zones just like we did before. The chart bounces off our first support zone, this time falling less than before and nearing the resistance zone again. Additionally, the chart's price is above the EMA, both of which the indicator takes into account and predicts an uptrend, signaling you to buy. The chart breaks our first resistance, now our second support, and continues to rise towards our second resistance. We pull our stop loss up to our entry point and our take profit level to our second resistance zone. Now, when the indicator sees the chart bouncing off the resistance without creating enough momentum to keep rising, it signals us to exit our position and take profit. Let's try again. We set our support and resistance zones. The chart keeps trying to break through our support zone, weakens, and then reverses in the other direction, enough momentum to break our first but not second resistance zone. Crawling along our second support zone, prices slowly start to drop. The indicator notices that and sets a sell signal, suggesting trading short. When the chart keeps dropping, we pull our stop loss down and now match our take profit to our first support zone. Bouncing off again, the indicator set a take profit signal to exit once again, which gets us to the end of our video. Like and subscribe to see more of our trading content. The indicator is linked down in the description or available at swiftalgo.net. Make sure to use the discount code SWIFTALGO20 when at the checkout. Thank you for watching, and see you in the next video.